If you have ever paused your SIP because the market seemed too high or waited for that perfect dip before starting, well, you have probably lost more money than you realize. A new study by White Oak Capital Mutual Fund based on nearly 28 years of Sensex data reveals that the biggest risk in investing isn't volatility, it's missing out on compounding. So what's the smartest way to make SIPs work for you? Let's break it down in this episode of PF Special. Now, most investors ask, when should I start my SIP? Should I stop when markets fall? Now, it turns out that none of that matters as much as one simple factor. Time in the market beats timing the market. The study shows that longer SIP horizons drastically reduce risk and boost the odds of higher returns. Now, for 10-year SIPs, the probability of loss was zero, and nearly 98% of the time, returns were above 10%. Another important point to note is this: starting at market peaks still beats waiting for dips. White Oak compared two investors. Investor A started SIPs at market peaks. Investor B waited for market bottoms. Now, surprisingly, the one who started at the peak built more wealth simply because they started earlier and invested for longer. Then there is this myth of the best SIP date. So what's really the best SIP date? Whether it's the 1st, 10th or 27th of the month, returns are nearly identical over time. So the best SIP date is simply the day your salary gets credited to your account. Another popular question: which SIP frequency gives better returns? The study found that daily, weekly and monthly SIPs delivered almost identical long-term returns. Consistency matters more than frequency. Also, investors wonder which is better, large cap, mid cap or small cap. Large caps provide stability, while small and mid caps offer higher growth potential but with more volatility. Interestingly, over the long term, mid-cap SIPs struck the best balance, offering steady, strong returns without extreme risk. Now for the most powerful finding: SIP top-ups. For investors whose income rises over time, gradually increasing SIP amounts can double long-term wealth. For instance, a 20-year normal SIP of 10,000 rupees a month grew to about 1.03 crore rupees, but a 20-year top-up SIP where the investor increased contributions yearly grew to 2.09 crore rupees. So if you have been waiting for the right time to start your SIP, stop waiting and start now. Even a small, consistent investment today can build your financial freedom tomorrow. That's all for this episode. For more such insights, follow Business Standard.